your portfolio down. Let's get our floor show traders in here. John Gagliardi and Tom Hayes. John, to you first. Your most worrisome headline and what you're doing.
I think that we're kind of seeing it, right? We're seeing some stalwarts at the top of the S&P starting to peel away and sell off. And a lot of this is all about the Fed. And the funny thing is everyone was interested in disruptors, and it looks like the disruptors were disrupted with 2 rate hikes. And we've got 2 big ones on the way, one in June and one in July. So we could expect a lot more of this is really the short story. Where does this go? Where does it end? My best indicator, I told other folks, my best indicator right now is July. In July, we'll have a much more clear picture of where inflation stands and what the Fed plans to do next. And this is the most transparent Fed we've seen in decades. So we're getting a very clear picture that rates are going up.
Tom, very few things are working right now. I am checking all of my screens here. Europe was pretty ugly today. Overnight China, everything was bad. And then you look at, say, for example, the metals, gold, silver, platinum, palladium, everything's down. Palladium, which of course is the substance that helps make catalytic converters convert, a big auto play here, down 7.33%. So talk to me about the headlines you see as most important. Does cryptocurrency really make a big dent in the psychology here, even if people don't own crypto? And what do you buy for a portfolio as far as insurance is concerned?
Yeah, well, there's an ancient Chinese proverb, Liz, that says, "He who picks bottom gets stinky fingers." So we have to be careful here. But as the 10-year has skyrocketed from 137 in just December, 137, to up to 319 earlier this week, and now back to 282. I don't know if it's so much of a crypto winter as it is a margin winter, and that's what I'm watching. You've seen the air come out of crypto stocks, innovation stocks, tech stocks, biotech, and China tech. This is all due to higher costs of margin. People are getting margin calls as long-duration speculative assets come down in price, and it's a cascading effect that has to flush through the system before we find a bottom. However, now that yields are stabilizing, they've stopped going up so quickly and they've backed off to 282, we're seeing something unusual. It's like it's opposite day today because biotech is actually green. And biotech is an interesting sector that we're looking at. Number one, it's near the low end of all its historic multiples. And number two, I think Pfizer may have lit animal spirits earlier this week when they bought Biohaven for $11.6 billion. The pharma companies have patent cliffs coming up, but they have a lot of cash, and biotech is trading at multi-decade lows, whether you look at price to book, price to free cash flow, price to sales. And now boardrooms across America and big pharma have been put on alert. If you don't buy these cheap companies, Pfizer or someone else will, your competitor will. So I think there may be some opportunity there that you can start to nibble into slowly here. We don't want to pick the bottom, but we want to ease in at these level of valuations.
I think so, and that's what we're hearing from a lot of smart traders. Tom, John, great to have you. Thank you very much. So much is happening right now, folks, and we still aren't at the lows of this